All right, so welcome to day 2 of the Forex Bootcamp, the Forex Workshop. So we're going to basically continue from where we started yesterday. And today is basically going to be a practical day. And to really follow along with what we're going to be doing today, it's very, very important that you already have a trading account with TenTrade, all right? So if you are here this evening and you do not have an account with TenTrade, TenTrade is the broker, right? So you want to go to this website and then create an account with the Forex broker, all right? So you must also know that this bootcamp is powered by TenTrade. This is a TenTrade organized event to teach people how to trade in a foreign exchange market profitably. And we don't only hold beginner sessions like this, we also hold advanced sessions every Mondays and Wednesday of the week. What we do is to analyze the market together as a community. And then what are we doing is to spot zones where we can trade from. And then we have been doing an amazing job with spotting the right zones to take entry. Mondays and Wednesday for advanced individuals is also a time whereby you can come on board line and then ask questions pertinent to your trading journey. Or if you need a second eye, someone else to probably analyze a particular pair for you, Mondays and Wednesday is an amazing time to join our sessions so that you can make very, very good trading decisions, right? So let us go ahead into what we're doing today. Now, today, we want to touch on a few concepts. We'll just write it down. Basic concept I'm looking at today. Number one, we'll be looking at how to open a buy or sell trade. And then we'll be looking at the concept of stop loss and take profit. We're looking at market executions or market orders. We look at market orders. We'll also take a look at market structure. Basically, we're talking about support and resistance and the best way to use support and resistance. 5, we'll talk about market trends. And then lastly, hopefully with time on our side, we'll talk about risk management. All right. So without wasting much of our time, let's get right into today's concept. Now, as we discussed yesterday, there are 2 major platforms that you can use to make your analysis, right? Number 1, and the highly recommended, is the MetaTrader 5. This is the MT5 platform. And then I told you that this platform, you need it downloaded on your PC, that's on your laptop computer. You can also download it on Android. All right, on Android. Right now, MetaTrader 5 is not available on Apple right now because of the sanctions against Russian companies in the US, right? So that you can follow along with what we're doing today, it's very, very important that you have your demo account ready on TenTrade, all right? So most of you here should already have a demo account. Mr. Ambrose, welcome on board. So Mr. Ambrose was here yesterday. Do you have your demo account set up now, Mr. Ambrose? Let me know in the chat box. Awesome. Good. So that means you can follow along with what we are doing. So let's talk about, you have a live account too. Awesome. So let's talk about market orders and then the types of market orders that we have. And then we are going to go ahead and actually place 1 or 2 trades. All right. So you can't see my screen? If you can, Mr. Joseph and Mr. Amakuri, can you see my screen? Let me know if you can see my screen. Or I'll just stop and share again. If you can see my screen, let me know. Can you see my screen now? You can see now. All right, good. So I think that was just a little bit of tech problems. Okay, good. We are good to go. So this is how MT5 looks on PC. So I would also show you how it looks on the mobile phone, right, shortly. So the majority of us are going to be trading on our mobile phone. So I'll show you how to do it on PC and also show you how to do it majorly on mobile phone, but it's the same way, right? So if you understand how it's done on mobile phone, you can do it on your PC. If you understand how to do it on PC, you can do it on mobile phone. It's quite an interactive platform, right? So let us start by talking about, let's start from the concept of market orders, right? Let's start from market orders. When we say market orders, what exactly are we talking about? Okay. Types of market orders. So remember, in the foreign exchange markets, what do? We buy and sell. That is what you are doing, right? So in that process of making a decision to buy and sell, there are different ways whereby you can be quoted into the foreign exchange market. Two major categories, right? The first category is via market or instant execution. That is, when you want to buy or sell a particular currency pair, you want to be quoted into the market immediately. You want to buy immediately. It's just like saying that you want to buy at the rate that the Naira is against the dollar now. At this current rates, you want to buy the dollar immediately. So that's an instant execution. And then the second type of market order, we call them pending orders. Okay, we call them pending orders. So a pending order is choosing to enter a trade at a later date. So right now, let's assume that the Naira to dollar is, let's say, 740. So 740 Naira to $1, right? So if you are trading, let's say, a pending order, you can tell the trading platform to buy or sell when the rate is, let's say, 700 or when the rate is 800. So you're going to wait for price to get a particular point before you enter a buy or sell trade. Okay. So while I'm talking about this concept, I will also be going to our trading platform, which is the MT5, and also doing a bit of practicals, all right? So that way we can really understand this concept properly, okay? Mr. Solomon Musa, you're welcome. Emmanuel Ibe, you're welcome, all right? So when we talk about, let's start from market execution. So market execution means that you want to be quoted into the market in real time, instantly. So based on your analysis, you think that, you know, this is a good time to buy this particular currency pair. And then you want to buy immediately, all right? So that is when you use market execution, all right? So I'm going to start by taking a look at it from the PC, right? So on MT5 for your laptop, if you want to buy a particular currency pair, how do you do that, right? The first thing is to locate the currency pair that you want to trade, okay? On the left-hand side, you will see the symbols area. Let me annotate that for you. Over here, you see the symbol area, okay? So by by default, it might not, all the symbols might not be here. So what do? Anywhere here, just right click on it, right click, scroll down, you see symbols. Okay, when we click on symbols, all right, so this is where you add everything. Okay, so if I want to add USD card, so USD card, you click on it, and then you click on show symbol at the bottom here, right here. Right, so you search for the pair that you want to trade. Okay, anyone, maybe this, and then you click on show symbol. When you do that, it's going to show over here. So this is how you populate. This is how you populate your symbol area. Okay, so let's move on. As soon as you start going through your MT5 platform and then you start playing with all of those functions, you'll get used to how it works. So let's assume that we want to trade Euro US. So this is a chart of Euro USD. Yesterday, we talked about the concept of candlesticks anatomy. So this green candle represents a bullish candle. The red candle represents the bearish candle. And then we said that candlesticks are just a visual representation of volatility in price or fluctuations in market price. Okay, so the skill set that you need to learn as a Forex trader is to know when to buy and then when to sell. Right, so how do you know when to buy and when to sell? We'll talk about all of that later. So let's say you've done your analysis on this platform. Okay, and then let me just digress a bit. These are candlesticks, and then on the trading platform, either your MT5 or TradingView, you can choose to look at how the market is doing on different time frames. For example, on MT5, you will see the time frames at the top here. So you can choose to view how price is moving by different time frames. So M1 means that every minute. So on M1 time frame, 1 minute time frame, every candle here represents 1 minute. So on Euro USD pair, you can see how the market is moving every minute, right? M5 is 5 minutes. So every candlestick here represents 5 minutes. So you are seeing how price is moving every 5 minutes, right? So we have that up until the monthly on MT5. So every candle here represents 1 month. So it took 1 month for each of these candles to form. So that means you can actually get data of the market, okay, way back, maybe up to 2000s or 1990s. Okay, so let's say you've done your analysis and then you want to sell with instant execution. How do you do it? Right at the top over here, you see new order at the top. So this is where you go to place an order on PC. So click on new order. When you click on it, you see this dialog box right here, right? The symbol to show you the euro dollar. And then under type, ensure that it is set to market execution, right? Because we want to enter the market instantly. Now, volume is talking about your lot size. So yesterday we talked about the different types of lot size. We have the nano lot, micro, mini, and standard lot. So based on your account size, you now put the lot size that you want to trade with. So let's just use the least lot size, which is micro lot, 0.01. All right. So stop loss and take profits, we will talk about that shortly. But stop loss is a price where you want to limit your loss. So if you are taking a trade and then that trade is going against you, so you want to tell MT5 that, okay, if a trade is going against me and price gets to a particular point, I want to be taken out of the market automatically. On the flip side, take profits is a point where you exit a trade in profit, and then you set all of this automatically, and then MT5 takes care of the rest. All right, so we'll dwell on that after this particular scenario. So let's assume that you've set your stop loss and then you've set your take profit. So the next thing is to sell or buy. So let's say we want to sell. What you do is just click on sell by market, and then immediately you'll be quoted into this trade. Over here, you see how your trade is running. You see it at the bottom right here. Okay, so under the trade tab, you see your trade, okay, everything as your trade, how much you are currently in profits or a loss. So if you're in a loss, you see it in red. If you're in a profit, you see it in blue. All right, so this is how you open a buy or sell trade. So if you are doing this for the first time, I would also like you to go to your own computers as well, and then just open a trade at random. Okay, open a trade at random. So I'm going to show you how it looks like on the mobile phone as well. So permit me, I'm going to share a particular screen now. And then we're going to go to the mobile phone and then check out how it looks like. All right, so this is MT5. This is MT5 on the mobile phone. All right, so of course you'd have to log into your MT5. So you come to manage accounts. Okay, click on the plus sign if you can log in, and then click on search for 10 trade. Find broker, you search for 10 trade, you see 10 trade there, and then you put your login details and then your password, and then you log in. All right, so we're assuming that we've done that. So now, how do you open a trade? This is your MT5 platform. You come to quotes, right? We have different parameters at the bottom. All right, pardon me. Different parameters at the bottom of this page. We have quotes, we have charts, we have trade. What do we have again? We have history and messages. Now, you want to come to quotes. So quotes will give you all of the currency pairs that you can currently trade. If there is a pair that you are looking for that is not here, what do? At the top, you see a plus sign at the top. So you click on plus and then click on Forex. So Forex will give you all of the pairs that you can add. So let's say I want to add this pair. So as I'm tapping on it, you're adding them onto your quotes. So, and then that will reflect here. Okay. So let's say I want to trade USD card. So this is USD card. You tap on the currency you want to trade. And then when you tap on it, you see new order. So you click on new order. All right. At the top, you see market execution. Okay, something similar to what we've seen on the PC. And then over here, the next point is the lot size over here. So by default, if you are just trading for the first time, you see it as 0.01. But if you have been trading multiple times, different trades, and then maybe you use a different lot size, right? Your lot size that will be there will be the previous lot size that you used in the previous trade. So ensure that before you take any trade, you are absolutely sure that you are using the right lot size. I've had a lot of students tell me that they wanted to use 0.02 and then mistakenly they used maybe 0.20, right? So that means they were taking higher risk than usual and then they lost so much or they made so much. So you want to be very, very patient when using lot size. So again, we'll talk about risk management shortly. And risk management is a lesson that will show you the right lot size to use based on your account capital. All right, so let's say you've put your stop loss So SL, you can see it is in red. So this is a zone where you put your stop loss. TP is in green. This is the place you put your take profit. All right. So once you've done all of that, the next thing you want to do is to click on sell or buy. So let's say you want to sell. So when you click on sell, all right, immediately you'll be quoted into the market for a trade. Right? And then you can see the USD card trade there. Right? So when you tap on it, you can see your trade details. When it is red, that means you're in a loss. When it is blue, that means you are in a profit. Okay, so that is how you open a trade. So how do you close a trade? By default, if you set a take profit, so by default, if you set a take profit, the trade is going to close by itself. But you can also close a trade manually. All right, so how do you close a trade manually? We have opened a trade right now. To close a running trade, just tap on the trade for like 1 second. It will bring out another dialog box here. And then you can see option to close position, modify position, new order, or chart. Okay, so let's try modify position first. So modify position means that you can modify your stop loss and take profit. So let's say as the trade is ongoing, you want to change your stop loss or change your take profits. When you click on modify trade, you can modify all of that. So that is what you do your modification, right? And then when you click on it to close position, click on close position. And then you see if you're closing with a loss, it will show loss. If you're closing with a profit, it will show profit. All right. So let's click on close with loss of 3 cents. So as soon as you close with a loss, all right, the trade is closed, and then that will reflect on your equity as well. All right. So when you click on today's trade, when you go to history, right, that will give you a catalog of all the trades that you have been taking, and then you can spool it either last month or last week or last 3 months, all right, depending on you. So that's how you open and close a trade, right, using market execution, instant execution. Okay, so let's talk about the next lesson now. The next lesson is how do you use pending orders, which is the other aspect of a market order. All right. So if you have any questions regarding opening and closing a trade, please let me know in the chat box so that I can answer your questions. All right. So let's stop this. All right, and let's go back to the trade. So I think I see a chart. Mr. Joseph, you're welcome. He said, please, I really want to know how to calculate lot size and amount on MT5. Yes, I'll touch on that before we end this course. Okay. So just stay online, Mr. Joseph. So we've dealt with instant execution. Now let's talk about pending orders. So when we talk about pending orders, what are we talking about? That means you also want to enter a buy or a sell scenario, but you don't want to enter immediately. You want to enter at a later date, right? You want to enter at a later date. So that's why we call it pending orders. So let's go a step further. There are 4 major types of pending orders. All right. We have limit orders. Okay, two categories. We have limit orders, and then we have stop orders. All right. So limit orders has to do with, you want to trade reversals, enter reversals. Stop orders, you want to trade continuations. It will make sense to you now, okay? All right, so let's break these categories down. So we have limit orders and then stop orders. Now, in detail, the 4 pending orders that we have sell limit, which is under limit orders. We have a buy limit. And then what do we have? Under stop orders, we have sell stop. And then we have buy stop. All right, good. So when you see something and then we call it limits, what I want you to have at the back of your mind is reversal, right? One thing that might happen to you, especially if this is your first time of hearing pending orders, is that you might get it really confused, right? Sell limit, buy limits, it won't really make sense to you. But this is how I was able to understand it when I was learning it. And I think if you get the way I'm going to explain it to you, you would also understand it easily. You won't have to cram anything, right? I don't like to cram. Okay, so this way is how I understand it. Now, limit orders. When you hear limit orders, I want you to think about orders that has to do with reversals. So a limit order is a reversal order, right? And then stop orders are continuation orders. So when you use a sell limit, that means you want to sell the reversal of a move. When you use a sell stop, you want to sell in the continuation. So let's go a bit deeper and then talk about each of these concepts one after the other. And then we'll also apply it in the market. So let's start with sell limit. Okay, sell limit. So when you use a sell limit, that means you want to enter a sell order, and that sell order, you want that sell order to initiate a reversal. So here's what it means. So for a sell limit, that means you want price. So let's say this is price right now. Price is going up currently. So the price direction is going up like this. Now, to use a sell limit order, remember limit orders are what? Reversal orders. So to use a sell limit, so based on your analysis, maybe you analyze that if price for any reason should come up into this zone, you think that you should start selling. So maybe you are going to be busy or you will not be chance to trade manually. So you want to set it and forget about it. So whenever price gets to that particular point, you'll be automatically placed in that trade. So that's the beauty of pending orders. It's very useful for people that are very busy. All right. So a sell limit order is a reversal order. So this is price, right? So when price gets into this zone, you want to enter a sell. If that is your plan, what you need is a sell limit. So over here, you are going to place a sell limit, right? You place a sell limit here. And at that sell limit, you would have to use the price. Okay, so the price will be somewhere here. So let's say this is the price, because FT5 will ask you for the price where you want to be quoted into the market. So when you do that and then price comes into this zone, immediately you'll be entered into this trade for a sell. All right, so that's why limit orders are reversal orders. So that's a sell limit. Good question, Mr. Sonny Patrick. When you place any pending order, you don't need to be online or even have data for that trade to become active. So once you've placed your pending order, everything goes into the server, right? And then it triggers on its own accord, right? So you can choose to delete it or modify it at any point in time, but you don't need to be online for the trade to trigger. Hope that makes sense. So that is what we call a sell limit. All right. So let's talk about a buy limit. So a buy limit is obviously just the reverse. Okay. So for a buy limit, you want to enter a trade that will initiate a buy, and that buy would be the reversal of the move. Right. So for a buy limit order, price has to be coming down like so. So market price direction is going down. This is the direction of the trade. But for you to enter a reversal, that means you are anticipating that price would go up at a particular point. So based on your analysis, you think that if for any reason price comes down into this place, right, you think that price should start buying anywhere in this zone. So over here, you want to place a buy limit. If that is your plan, if you think that when price gets here, it will start buying, you want to place a buy limit here. So when place a buy limit here, like so, and then price gets into this zone, immediately price touches this price point here. Immediately, you'll be entered into the market for a buy. Okay, that's a buy limit. So you can see why I'm saying that when you think about limit orders, think about reversal. It's a reversal order. All right, reversal. So this is sell limit, and then this is buy limit. Right. On the flip side, let's talk about stop orders. For stop orders, we are dealing with continuation for stop orders. So for sell stop, let's start with sell stop. So the same scenario here. Okay, so for a sell stop, it's a continuation order, right? So if price, when you see price coming down like so, and then maybe you did not enter the trade immediately, or you are waiting for some certain conditions to align, or based on your analysis, you are a breakout trader, you're waiting for price to break a particular zone. All right, so you are waiting for, you want to continue this move. Remember, stop order is a continuation move, is a continuation order. So you are saying that if price for any reason, for example, gets to this zone, if price breaks below this zone, like so, if price breaks below this zone and then price gets here, you want to be entered into the trade for a sell to continue that downward move. So you are continuing the move. So a sell stop, right? When you set it here, as soon as price gets into this zone, it will trigger your sell stop order, and then you'll be entered into a sell to continue the move to the downside. That's a sell stop. So sell stop is a continuation of the sell move, right? Hope that makes sense. Now let's deal with buy stop. Buy stop is simply a continuation of the buy move, right? Just on the flip side. So for a buy stop, let's say price is going up, right? And then based on your analysis, you are waiting for price to break a zone. So let's assume that the zone is up here. So as soon as price gets to this zone or breaks a particular point, let's say here. So as soon as price touches this zone, you want to be entered into the market for a buy. So you want to continue the buy move. That's when you use a buy stop. So when price touches the price point that you set, immediately you'll be triggered into the trade for a buy. All right, it's as simple as that. So these are the pending orders that will come in handy when you start to make analysis, enter trades. All right, so there are times that maybe you are trading on a very fast time frame, like the 1 minute time frame or seconds time frame, and then you don't want to miss some trade entries. You can easily use a pending order to enter trades. Or maybe you are going to the church or something, to your mosque, to your work, and then you cannot be actively on the chart to trade at that particular point in time. You can easily bring up your smartphone, load up your MD5, and then set a pending order. So it comes in handy numerous ways. So it's very, very important that you know how to use them, and then know how to use them individually, so that you don't carry one for the other. So let's do a practical example how we can apply a sell stop or buy stop, and then we'll do it on laptop and also on mobile phone. Okay, so I'm going to share my PC right now. All right, so we enter the Euro USD trade, so we're already in profit. To close a trade on your PC, you see the X button. So just click on that X to close a trade, and immediately that trade will be closed. Okay, so close it. Good. So, and then your profits will reflect. So let's talk about how to enter a pending order. Very, very simple. The same way you open a market execution order, you click on new order, okay, symbol. Now, under type, instead of using market execution, you now select pending order. When you select pending order, right, they're going to ask you for the type. Which type of pending order do you want to use? And then you see buy limits, sell limits, buy stop, sell stop, right? There are other ones, but let's just focus on these four, right? These are the major ones that you need. So let us use a buy limit order for this example. So let's go back to the chart and check out what's going on this chart. So you can see price is currently going up right now. All right. So a buy limit order is at a point in time, if price should maybe reverse, start coming down into the zone, you probably want to enter a reversal trade. So if price reverses into this zone, right, I want to be entered at this particular price point. So where I put that horizontal line, so that's the point where I want price to put me into a trade. So if price starts coming down and then price gets into this point, I want to be entered into market for a buy. Okay, so I come to new order, select your pending order, type buy limit, you put your lot size, and then they're going to ask you for the price. So the price is a price of where you want to take entry. In this case, it is 0.98679, right? You put your stop loss, your take profit, and then you click on place. All right, so you can see it over here. The trade is placed, and then it is not active yet. It will only be active when price starts coming down like so into the zone. You'll be entered for a buy limit. All right, so let's look at another example. Let's do a sell limit example. Okay, so for a sell limit, currently price is going up like so, right? So let's say based on your analysis, you think that if price gets into this area, because maybe this is the structural area, you think that price will start dropping. Let's use the rectangle. So you think that when price gets into this zone here, price will start dropping. Okay, so, and then you don't want to wait in real time for that to happen. You can easily set a sell limit to enter the reversal. So over here, all right, so when price starts going up and then touches this price point, you want to set a sell limit. So when price gets there, you'll be entered into the trade for a sell. How you do that? You come to new order, okay, change it to pending order, okay. Under type, select sell limit, volume, put your lot size there, and then price is a price where you want to enter for a sell, which is 1.12244. Okay, it's as simple as that. And then immediately you see the pending order. So it will not be active until price gets inside that zone. And then you can modify orders at will or even close them. Okay, so to modify, just right click on it, you see modify or delete. You can change the price, you can change the stop loss, you can change the take profit, or you just delete it. So to delete, or just click on the X sign below to delete. And then you're good to go. All right. Let us try the same thing on the mobile phone and see how it looks like real quick. All right. So let's stop this. Okay, so this is our MT5. This is our MT5 on mobile phone. Let's use the same Euro USD. So you want to go to the chart. So this time we are going to use a stop order. So a stop order is a continuation order, right? So let's say we are waiting for price to get to this point here. So where that red line is, okay? So based on your analysis, let's assume that you think that if price should keep going up like so, and price should get here, you think that there'll be a continuation to the upside. So when price gets here, you want to be entered into this trade for a buy. So in that case, you will use a buy stop because you want to enter the continuation, right? So how do you do that? Very, very simple. All right, you come to your chart, to your quotes. This is your Euro USD. Click on new order. All right. Market execution, you change it to what? Buy stop. Remember to use the right lot size, and then they're going to ask you for the price. So let's quickly check out the price real quick. That is 1.06657, right? 1.06657. 1.06657. Oops. 1.06657. Right? Once you do that, you click on place. So immediately, the order is placed. When you go to the chart, you see your order is going to be there. You can see the the buy stop order is there. So as soon as price gets into that point, you can see the buy stop at the top. As soon as price gets there, you'll be entered into that trade for a buy. On the flip side, we can also use that same zone for a sell limit, for example. Okay, so we've done sell limit. So let's do a sell stop. So for a sell stop order, let's say that based on your analysis, you think that if for any reason at all, price gets to, if price gets to this point below here, if price should come down and get here, you think that price will keep going down. So you want to enter into the market at a very, very good price. So a sell stop order, when price gets into that point, you'll be entered into the market for a sell. I'm talking about this zone right here. Okay, so when price comes down like so, okay, and touches this price point, you want to enter for a sell. How do you do that? You use a sell stop. All right. So let's get that price 1.05697. 1.05697. New order, change to pending sell stop. Okay. 1.05657. Emmanuel said, I can't see the screen. Guys, can you see my screen? If you can see my screen, please type in yes. If you can't see my screen, please type in no. Okay, so Joseph can, so good. Mr. Emmanuel, can you check from your end, swipe left or swipe right? Maybe you're off the screen. Okay, so that's where you put the price, put your stop loss taper, and then you click on place. So as soon as you do that, immediately, if you go back to your chart, you can see you'll be entered the market at that point for a sell stop. So that is how we use pending orders. The goal of pending orders is also to enter a buy or sell trade, right? To modify, just tap on anyone for 1 second. You see modify. If you want to change something, either the lot size or the price itself, or stop or take profit, you can modify. Or to delete, just tap on it for a second, click on delete order, and then it's off. Is that easy, guys? All right. So let us go into the next concept. Give me some feedback, guys. Do you understand what we are doing so far? And please, if you've not done this on your own and then you are a beginner, kindly try it out on your own platform as well. All right. So please try that on your platform as well. I want everybody to follow me as much as they can. So let's talk about the concept of take profit and stop loss in 2 minutes. Okay. So what is stop loss? Stop loss and take profit. As you have seen that when you want to enter a trade on MT5, you are being asked for those values. So let's do a scenario for a buy. So let's say you want to buy here. If you are taking entry for a buy, that means you are anticipating that the price of that commodity is going to go up, right? So you want to buy at a very low price. As price is going up, you are making profits. Okay, so that's the concept. But there are times that, you know, market might not go your way. That's why you must have, you know, plans in place to minimize your losses. So if you enter a buy at this level, let me use So when you enter a buy here, so, and then for some reason, price starts going against you. It starts going in an opposite direction. As it is going against you, you are losing money. The money in your capital is reducing. All right. So in order not to lose all your capital on one trade, you want to have a system in place to minimize your losses. That's why we say stop loss. So in that case, we use a stop loss. So a stop loss is a price in the market where you want to exit a trade in a loss, right? Stop loss and take profit are, both exit prices. So there are places where we exit a trade in a loss or in a profit. So for stop loss is a price point where you want to exit a trade in a loss. So that's the maximum loss you are willing to incur on that trade. So maybe your stop loss will now be somewhere here. So if for any reason price comes down to this price point, right, automatically MT5 is going to close that trade for you automatically in a loss. So you wouldn't lose more than price getting beyond this point here, right? On the flip side, a take profit is your reward. So this is where you want to take exit in profit. So when price starts going your direction, at what point do you want to exit the trade in a profit? That is a take profit. All right. So for a buy order, right, a stop loss is below, right? Stop loss SL. Then the take profit is above TP. All right. So that's what stop loss is and take profit is. And then if we play this forward, you see, so there's a price point attached to it. So let's just use that. All right. So you can see, is this price now that you now quote on MT5. But when we start to deal with strategy, you will know the right stop loss to use and the right take profit to use based on that particular trade. All right. So we just don't use a random stop loss or take profit. Stop loss and take profit are peculiar to different strategies and that particular currency pair. But just right now, I want you to understand the basic concept. All right. So let's do a scenario for a sell. So for a sell scenario, let's say price is here, is at the top here, and then you plan to sell. How do you make profit selling? You sell high, right? And then as you are selling, that means you are anticipating that price is going to go down. As price is going down, you are in profit because you are selling high and it's going down, you are in a profit, right? So if for any reason the trade is not going your direction like this, it's going against you. As soon as it is going against you, you are in a loss. So to minimize your loss, you need a stop loss. All right. So let's say this is your stop loss over here. So when price gets into this price, automatically you'll be taken out of a trade. And then on the flip side, when price starts going your direction, you need a take profit. So when price hits this zone, that trade will close in profit. All right. So it just helps you simplify exit points on a particular trade. Meanwhile, remember that you can close a trade manually, even if you've set a stop loss or a take profits, you can close a trade manually. And then I've shown you how to close a trade manually. Okay, good. So that's clear. Now let's talk about the next concept, let's talk about support and resistance real quick. So we are gradually going to start analysis. Support and resistance. Okay, so when you think about support and resistance, for now, what I want you to have at the back of your mind is, number one, think about market structure. About market structure. And then number two, I want you to think about reversal, areas of reversal in the market. Let's say reversal zones or reversal areas in the market, right? And then lastly, I want you to think about historical data, history. Okay, historical data, okay, to predict the future. All right, awesome, Mr. Joseph. All right, good. So support and resistance is market structure. And then why are we teaching ourselves what support is and what resistance is? It is to know exactly where to buy and where to sell in the foreign exchange market. So support and resistance gives you an idea of where to buy and sell. The whole essence of what you are doing as a forex trader is to buy and sell. Right? So how do you know the best place to buy? How do you know the best place to sell? Right? Your starting point is to understand what a support is and then what a resistance is. Right? And support and resistance, as we'll go into them shortly, are reversal zones in the market where price reversed. And then talking about historical data is where we start spotting support zones. So in the past, price reversed in a particular price, in a particular zone. So if price should get to that same zone somewhere in the future, because it has happened in the past, most likely it might also happen in the future. It's just like saying that Buhari now, that has been in power since 2015. We all know the performance rate so far of Buhari and the APC, right? So if they are to contest again in 2023 elections, because of their track record, historical data, we most likely know exactly what to expect in the future if we vote them in. All right, so that's the whole ideology behind support and resistance. So let's go straight into explaining what each of them is all about. What is support and then what is resistance? So a support is an area of the market, okay, that acts as a floor. All right, a support zone is an area of the market that acts as a floor. I will explain now. Just like the floor you have, the floor in your apartment right now, most likely if you throw a ball on the floor, right, it will bounce back up. It will not go beyond that floor, except you are throwing it with a very, very great force, or the nature of the ball itself is very, very strong that it can break things. So a support zone is an area of market whereby you see price reversed in a floor. So let's say price is coming down like so, and then price got to a particular place, and then suddenly you see a sharp change in direction, a reversal. Okay, so what happened there is that price hit a support. So we call that a support. So price hit a support. All right. So because in the past, this zone acted as a support, in the future now, if price should come back into this zone, we are most likely also going to anticipate price also reversing, like so. So we are using historical data to predict what might happen in the future. All right. So I'll take it again. All right. Support and resistance is simply using historical data to predict what would happen in the future or what will happen right now. So when you are identifying support zones or resistance zones, it's based on what has happened in the past. So when you check the charts, you are checking market movement as it relates to current market price. So what happened in the past? So you spot a support zone. And I said a support zone is a zone in the market that acts as a floor. So when price gets to a floor, we should see a reversal. And then you cannot miss it. It will be very, very visible. So price will change from bearish, like this, bearish candles, and then you start seeing bullish candles. So there's a visible reversal, right? So when that happens, we say that price has hit a support zone. So now we've identified a support zone. So if price should come back here in the future, because in the past it acted as a support, and that support, what did that support do? It pushed price up. So if in the future price is coming back down like so, right, we would also be looking to buy here, because in the past this zone acted as a support. So what do we do in a support zone? Why do we need to identify support zone? Because support zone helps us to know where to buy. All right, so you should write this down. Right, what do we do at support? We buy at support. Okay, we buy at support. All right, now support and resistance in themselves, they are not standalone trading strategies. Let me tell you that, right? They are not standalone trading strategies. So you cannot just take trades based off of just a support zone or a resistance zone. You need to subject those zones to additional confirmations. But my goal in this particular tutorial is to just give you a general understanding of support and resistance, and then I want you to also be able to spot them on your own. So I won't really go into great detail on how to use support and resistance because of time. All right, so I'm just trying to mash up everything. 10 Trade is working on something amazing next year. We have great plans for beginners, such that for 4 weeks, right, every beginner, we can really have a deep dive into all of these concepts. So every month, I think every month for like 3 to 4 weeks, right, I'll be here to really touch down and really go deep into this concept and then tell you everything about it. But right now we are only doing 2-day webinars, which is yesterday and today. All right, so please pardon me if I'm not going deep, but I want you to understand this concept. So as you get this concept and as you start joining our Mondays and Wednesday sessions, these things will start getting very, very clear to you. All right, so after we do all of these tutorials, you also need to, on your own, go on the chart and then spot these zones, because you must train your eyes to be able to spot these zones, because that's what you'll be doing as a trader, spotting areas of reversal. So we buy at support. Now, because a support zone was valid in the past, does not always mean that in the future it would also be valid. Okay, price can come down here and break a support. So a support zone can be broken. So that's why we need to subject a support zone to further confirmations, which we are going to learn about as we join these sessions. All right, so let's talk about resistance and then we'll view everything on the chart. So a resistance is an area of the market that acts as a ceiling, right? Resistance. Just like your apartment now, the ceiling in your apartment, when you throw a ball, most likely it's going to come back down, except you throw that ball with a great force, or that ball is made of, tall material, okay? That's when it can break. So a resistance, let's bring the rectangle there, like so. Okay, so see price is going up like so, and then price gets to a particular point, and then you see that when price got to a particular zone in the market, you are seeing a very strong and strong and swift reversal. Price change direction. There's a reversal. There's a visible reversal, and then you saw this happen in the past. So what do? You mark it out, and then you are expecting that in the future, if price gets to this place, if price should come back up here in the future, right? You want to also look for sells here. All right, so that's resistance. So when price gets to a resistance zone again, you are looking for sell. So we buy at support and then we sell at resistance. We buy at support and then we sell at resistance. Okay, write that down. We buy at support and then we sell at resistance. So let's go a step further in validating a resistance zone and then a supply zone, right? So ideally, how do you want to validate that, okay, a support zone is valid or a resistance zone is valid? You are looking for at least two touches of a support zone or a resistance zone validates that zone. So when price does this, so let's run an example for support. So this is the first touch. When price comes down again, this is second touch. If price should touch it for the second time and then maybe price goes up again, okay? So these two touches has validated this support zone. So if price should reverse back into that zone, you can start looking for a buy opportunity, okay? In the same vein, two touches will usually validate a resistance. So we have first touch here, like so. Second touch, if price goes back up, touches that zone again, okay? And then you see a reaction there. So if price should go back there again, okay, it has been validated by these two touches. So it can be two touches, it can be three touches, it can be four touches, all right? So, but minimum of two touches is what will usually validate is support or a resistance. If you understand what I'm saying so far, please type in a yes in the chat box. Type in a yes in the chat box if you understand what I've said so far. Awesome, Mr. Sunday, Mr. Manuel, thank you so much. Mr. Joseph, extra yes, awesome. Okay, good. So let's just take a look at spotting support and resistance zones in the markets real quick. Right, so you need to be able to train your eyes to spot these zones. Right, so you have to spot them by yourself. Okay, so we are not going to take anything into consideration. We are just spotting areas of support and resistance. All right, so let me start from here. As you can see, price was coming down here. When price came down here, right, immediately we are seeing a switch reversal. All right, switch reversal. So what that means is that this zone, okay, is a support zone. So you want to just mark that out here, the zone. So if in the future, okay, price gets to come back down into this zone, you can be looking for a buy opportunity, right? That is one zone, right? Let's zoom in and then show you another zone, right? So over here, you can see this price coming down like so, and immediately we are seeing this swift move to the upside. So something was responsible for pushing this, right? So possibly that is support. So we can draw that zone. So how do you map out a support zone? I recommend that you use a rectangle to map out a support and resistance zone. So a support and resistance is not a line, it's not a price, it's a zone. And usually I'll recommend that you use the last candle, okay? The last candle before the reversal. Okay, so in this case, let's take this. So this is it in this case, right? As you can see, so the second time that price now came down, you can see that support zone was broken. It was broken. So that's why support zones don't always hold. Now, let me show you what really happened. If we check this out, check out this zone here, this red candle. This is a zone. Let's replay this. And then if you check out this zone on maybe a lower time frame, like let's say 30 minutes, for example, okay, you will see that we can see huge reversal here. So let's assume that this is a zone, for example. Let's say somewhere here. Forward, okay. Just want to show you how a support zone reacts. Good. Excuse me. All right, good. So if we map out this zone, this is a support zone, like so. And then because when you look at this place, there is price went up like so, it came down, and ultimately you can see the change in price. So this zone is a reversal zone, right? And then check out what happened in the future, right? You can see a touch here, first touch, right? Second, the third time that price will get here, you can see that move, and ultimately price came back down a bit beneath the zone, and then ultimately you can see the move up. So this is an example of a valid support zone that did its work. All right, so again, the essence of marking a support zone is to give us an idea as to where to buy. So you are only trying to spot areas of reversal. Hope that makes sense. Okay, let's do another example. All right, so price is coming up like this. Okay, you can see this structure here. So price at the point came down and then price came up, right? All of this is an area of support. So this is the first touch. Second touch, you saw the reaction here, push price up. And the next time that price was going to come down into that support zone, you can see how it pushed price all the way up. All right. So your assignments, what I want you to do this weekend. So most of us would be on the holiday this Christmas season. So take time this holiday, go on different time frames, on different currency pairs, and then start spotting areas of support and resistance and seeing how price reacts at these different zones. You want to train your eyes to spot support zones, because if you cannot spot what has happened in the past, you can't spot what is going to happen right now or in the future. So, and then spotting it as well would also help you to create affinity with the chart, right? Because you need to be a friend of the charts. What we do as Forex traders is quite boring, just looking at these candlesticks, but it will start getting interesting once you start making money from it. And that's where we all want to be, right? Learning how to interpret the charts and then making money from the charts. All right. So that's that about support. Let us talk about resistance real quick. The resistance zone is what is going on the flip side, right? So, which is a ceiling. So you have this. So let's use this zone. Price came up like this, and then suddenly you see a sharp and swift reversal. Price came all the way down. All right. So this right here is a zone where we are seeing activity of resistance. Over here. So I like to draw the last candle. So this last buy candle, or those mark out from top to bottom. All right. So we can see the resistance here. Price tapped into this zone. You can see first touch, second touch here. You can see it's acting up. Okay, so if you have sold here, you would have made profit. Price came back into that zone again. You can see that zone also acted, push price back down. The fourth time that price came here, you can see how price came down, right? Sixth time or fifth time, price came here and then went all the way down. And ultimately, price broke this zone, right? So I need you to, what you are doing is just to spot areas of reversals as it relates to support or resistance. We are not talking about strategy yet or how to enter in a support or resistance, but I just need you to get yourself familiar, okay, with a support and resistance. This is another resistance zone that worked, okay? You can see resistance here, price came back down, pushed, came back and pushed. All right. So you see this play out every single time. Every single time. Check this out. Okay. Resistance, resistance. All right. Check this out. This was an area of support. Okay. That was eventually broken. All right. Area of resistance here. Okay, that was broken eventually. So you see that not every support is valid, not every resistance is valid. So the work or the skill set that you now need to learn is how to know the best support to take trades from and then the best resistance to take trades from. So we'll learn all of that as we progress in our tutorials. Okay, hope that makes sense. Mr. Emmanuel, Mr. Joseph, Mr. Solomon, Mr. Sunday Patrick. Okay, so please, your assignment this weekend, go on any currency pair, at least 3 currency pairs, and then you want to spot support zones and resistance zones. Mark them out on your chart. Spot it. Very, very important. It will do you a lot of good. It will do you a lot of good once you're able to spot it and then chart it out. Okay, so that way it will really, really make a lot more sense to you. All right, so because of time, let's move to the next concept. Next concept, we have about 30 minutes to an hour left in tonight's session, and I still want to cover some very, very important topics, right? So it is when you are spotting your support zones, your resistance zones, and then you are you have a strategy or a trade plan. That's when you now start taking buy or sell orders, right? So don't be tempted to. So for most beginners, what they do is that once they see a green candle like this that is going up, they are tempted to just enter for a buy because they see price, they see candlesticks. No, right? You will not make money consistently that way. You might be very, very lucky to enter a trade like this, and then you can see like this trade, it kept going up. All right. What if you were here when price was going up and then you enter for a buy here? You can see price just went against you. All right. So you don't enter a buy because you are seeing buy candles, and you don't enter a sell because you are seeing sell candles like this. You need a trading strategy, a trade plan in order to be successful. And that's what we are going to help you build over time once you keep joining the 10 Academy weekly sessions. So like I always tell people, Forex trading is a journey, right? You are here to learn how to make money. And for every new thing that you learn, there's usually a learning curve, especially what will make you money, right? There's a learning curve to it. So you have to really be patient to learn. Don't be in a rush to make money in the Forex market. If you're in a rush, that means you are in the impatient camp. And the market, what it does is to move money from the pocket of the impatient people to the patient people. All right. So how long it's going to take to master this Forex skill will depend on you individually and how much passion you have for it, and then that the time that you commit to learning it. But trust me, the potential in the Forex market is so huge. It has the capacity to really transform your finances if you learn the skill sets properly. All right, so let's talk briefly about market trends as we start to wrap up tonight's session. Let's talk about the types of trends that we have. Types of trends. So trends, in essence, just talks about, types of trends. Trends, in essence, talks about the types of market direction, in essence. So we have two major types of trends. We have uptrend and downtrend. So price will either be in an uptrend or in a downtrend. And then there are times that the market moves, sideways. So for sideways move, we call this price is consolidating, we call it consolidation, or you can say that the market is ranging. Okay, so different people call it different things. All right, but majorly price is in we have an uptrend and a downtrend. So let us talk about it real quick. So let's start with uptrend. How do you know that price is in an uptrend? So an uptrend is when you can see bullish candles going up, right? Price is going up, right? But this is not the way price is going to be displayed in the market. Price does not move in a straight line like this. All right, so this movement will look like this. So you have price will go up to come back down, to go up, to come back down. So price moves like this, zigzag, like so. That's an uptrend. And then for a downtrend, price also moves zigzag, down, up, down, up. All right, so this is how price, so when price is going down like this, you say that price is in a downtrend, or you say price is bearish. The trend is bearish. If it's in a downtrend, you say the trend is bearish, okay, or we are in a bear market. When price is in an uptrend, you say that the trend is bullish. It's a bullish trend. Or you say we are in a bull market. So remember, bears and bulls, bulls and bears. So bear means a down move, and then bull means an up move. All right, so let us dissect how a trend really looks like. So we have three different components of a trend. So let's say for an uptrend, you have this move. So the first move in a trend is the impulse move, and then you have the correction, and then you have the impulse. So this is for an uptrend like so. So this first move here is an impulse move. So we call it the impulse. It's an impulsive move. Impulse move. And then we call this move downwards the correction. It's a correction. Or some people would call it retracement or pullback. Let's say retracement. Okay, but the right word for it is a correction. Is a correction because it's a corrective move. And then the last move in a trend is another impulse. So a trend is made up of an impulse move, the correction, and then another impulse move. And then a trend can continue. So if the trend would continue, you see price will form another correction, and then another impulse, right? And then another correction, and then another impulse. Okay, so this is how an uptrend will look like. In a downtrend, what do we have in a downtrend? Just the opposite. You have the impulse move, you have the correction, you have the impulse, you have the correction, you have the impulse, correction, impulse. All right. So why do we need to know what an uptrend is and know what a downtrend is? It's very, very important, because you always want to trade with the trend, right? You want to trade with the trend. So a rule of law is very, very important that once you're able to understand, to figure out market trend, you want to trade with the trend. So if price is in an uptrend, you want to look for buy. You buy in an uptrend. Okay, and then where do you buy in an uptrend? At an area of support. When you spot a downtrend, you are looking for sell opportunities in a downtrend. And then where do you sell? You are looking for resistance. All right, so because of time, I don't be able to really explain this, but understand this concept. You want to trade with the trend, and when you spot an uptrend, you want to look for buy opportunities in an uptrend, and then in a downtrend, you want to look for sell opportunities in a downtrend. So you are trading with the trend. Very, very important. You are trading with the trend. All right. So let's go to the chart and then spot trend. For example, look at how price is. Can somebody tell me the way price is now, looking at this structure, is price in an uptrend or a downtrend? Please give me your answers in the chat box. Is price in an uptrend or a downtrend? Mr. Sunday said uptrend. Good, correct. Can see it's very, very simple. So in this kind of markets now, what you'll be looking for ideally is not to sell. In an uptrend, you are looking for opportunities to buy. You are looking to buy in an uptrend. You can see the structure, what price is doing. You can see the correction, okay, impulse, correction, impulse, correction, impulse, correction. All right, so you're looking for buy opportunities in an uptrend. So it is safer to look for buys in an uptrend. Not that you cannot find a sell setup, but it is very, very risky. It is riskier to look for sells. You are safer, okay, in looking for buys in an uptrend. All right, let's find a downtrend scenario. Okay, so I think we found one here. You can see what price is doing here. You can see this downtrend price, impulse, correction, impulse, correction. That's it, impulse. All right. So in a downtrend, it is safer to look for sell opportunities, and then you are looking for price to align in a resistance zone. Okay, and then you sell. When price aligns in a resistance, okay, you look for sells. All right, so we buy in an uptrend, and then we sell in an uptrend. You are trading with the trend. Okay, type in the chat box, trade with the trend. Type it in chat box, trade with the trend. It's very, very important. Type it in the chat box, trade with the trend. Awesome. Thank you so much for your response. Okay, I like that you guys are engaging with me. Okay, so let us wrap up tonight's session. Let us talk about risk management real quick, and then we would wrap this class up. We have been here for about 2 hours now. Let me leave you to go and enjoy your weekend. Today is Friday. Let's talk about risk management real quick. So risk management is simply how to manage your risk. And then I'll just talk about one aspect of risk management. Just one aspect, because we're just getting started. And that one aspect is what? Knowing the right lot size to use. The right lot size to use per trade. All right. So how do you calculate that? All right. And then the other aspect that I'll just talk about briefly is knowing how much you are willing to like, before you enter a trade at all, you must ask yourself, if this trade goes against me, what is the maximum in percentage that I am willing to lose? All right. A good trader usually considers risk first before reward, right? A good trader, before calculating, before, thoughts about profit, you need to first and foremost consider the risk, how much you are willing to lose per trade. So, and you want to know that in percentage. So for every trade that you take, so let's say you have a capital of, let's say $1,000 capital. On a trade that you are taking, how much of this capital are you risking on that particular trade? Now, my recommendation as a beginner is that on every trade, you want to risk 1 to, let's say 5%, between 1 to 5% of your account per trade. All right. So if you are risking 1% per trade, that means if that trade goes against you, you would only lose 1% of your account. And that is just $10. So if you are risking 1% per trade, that means in order for you to totally blow your account, you need to lose how many trades consecutively? If you are risking 1% per trade, in order to lose your account, how many times will you need to lose to blow your account? My math people. So if you are good in math, give us the answer in the chat box real quick. Let me know if there are math scholars here. 100 times, good. Now, let me ask you this sincere question. Is it possible to lose 100 trades consecutively if you have a trade strategy that is okay? Is it possible to lose 100 trades consecutively? It's not possible. It's not possible. So the major reason why people blow accounts is because they do not consider risk. They are only considering the rewards. So they use a very high lot size. And then under 2 to 5 trades, all their account is gone. You don't want to start on that note, right? The mark of a true trader is hidden in how strong his risk management is. All right. If you are risking 5% per trade, which is, if you're trading 1K account, that is $20, right? In order for you to blow this account, you need to lose 20 trades consecutively. I mean, like you lose 20 trades back to back. Gentlemen, it's not possible. If you have a good strategy and then you are trading according to your plan, it's not possible. It's not possible because an average trader will blow their account within a month. So that means you are losing 20 trades or 100 trades consecutively in a month. It's not possible. So people are risking way higher than they should. So my recommendation for you is to have skin in the game, to be here in the long run. You want to start your journey with a maximum of 5% of your account per trade. So if you now decide on the risk that you want to take per trade, how then can you now calculate the lot size that you'll be using? It's very, very simple. We are going to be using a tool called the position. We use something called, let me put it here. We use something called the position size calculator. Position size calculator. And then this is a free tool to use. If you go to your Android Play Store or your App Store, your Apple Store, just search this keyword. You will see a lot of apps, but I'm going to use the web version and then show you real quick. So let's go to our browser and then let us search for position, position. So it's position size calculator. So when you search for it on Google, it is usually going to be the first result that you see. All right, you can see the first one, and it is a website from my FX book. So let's click on it to go there. Good. So this is what we use to calculate the lot size to use per trade based on your capital. So you'll be asked a few questions, then you answer. So the currency pair that you are trading. So over here, if you are trading a different pair, you choose a pair. Let's say you're trading USD CHF. Your account currency is in USD, right? Account size talks about the capital that you are trading. So let's say you are trading $1,000. That's your capital in real time. Your risk ratio, so this is not asking you, what is the percentage that you are willing to lose on this trade? That's what we just talked about. So I recommend for a beginner between 1 to 5. So let's choose a middle number. Let's say 3. So you are risking 3% per trade. What is your stop loss in pips? Okay, so that means you want to measure. So let me quickly use this. So let's say you are entering for a buy. All right, so this is your entry. Let's call this E. Right, E. And then your stop loss is somewhere below here. So if you measure what is a pip from your entry to your stop loss, the pips, remember we learned about pips. So when you measure it, when you measure from your entry to your stop loss, what is the value in pips? Is it 10 pips or 20 pips or 5 pips? You put it here. All right, so let's use 10 pips just for an example. And then trade size in lots, leave it as default. Don't touch it. Leave it as default. And then once you do that, you click on calculate. So once you click on calculate, you see sizing. So this sizing, you see it, you should use 0.28 lots. So this 0.28 is what you will now use, what you put on your MetaTrader 5 platform. So if you lose this trade for any reason, you only lose what? $30 of your account, which is 3% of your account. All right. So that is how we do it. So okay, I will show you the pips later on MT5. All right. So I'll show you shortly. All right. So all of this is what you need really. So if you plan to use, let's say 1% of your account per trade, you calculate, you can see the lot size will change. It will reduce to 0.09. All right. So you would always get different results based on your risk setting, based on your capital, based on your stop loss in pips. Is that clear? Let me know if you understand this risk part. If you understand it, please type in yes. If you don't, type in no. How to calculate your risk. So let's say yes. Yes. Okay, good. So let me show you. Good, Mr. Emmanuel Ibe. Good. So let me show you how to calculate pips on MT5. It's very simple. All right. So looking at this particular chart here, so let's assume that this place is our entry, and then this extreme here is our exit. How do you calculate pips on MT5? We're going to use a tool called the crosshair. This cross sign is called the crosshair. So that's a tool that we use to calculate pips. So you just go to it, select it, and then you see the cross thing come out. So from your entry starting point, you click on it, and then you just drag it up to your exit, to your stop loss. So you see the value in points. You can see it, right? So over here, you can see 3907 points. So that is 3,907 points. Now, this value is given to you in points, not in pips. So all you have to do is very, very simple. Just divide it by 10, that's all. So when you divide it by 10, it will give you the value in pips. So 3907 divided by 10 is 390.7. So this pips is 390.7 pips. Hope that makes sense. That is 390.7 pips. So, Mr. Joseph, that is how you calculate pips in a nutshell. All right, guys. Awesome. Any question, guys, before we call this a night? I want to greatly recommend that you watch the replays of this session so that you can really, because there are some things I'm sure you must have missed, right? So when you hear it again, it will make a lot more sense to you. And then I want to recommend that you also join our weekly sessions that we organize at 10 Trade. Every Monday and Wednesday, we are analyzing the markets. We are spotting zones where we should trade from. Okay? So please join those sessions Mondays through Fridays. Sure, Mr. Joseph, please unmute yourself and ask your question.
Well, good evening, sir.
Good evening.
Good evening, everyone. My name is Joseph Ezeking. I really do appreciate your class. See, the whole thing I want to say is not a question. I just want to appreciate it because I think even in Bible, the only thing that keeps a man is just for little word, hope. So you are giving me hope. You just arose my hope from a falling place. Like you don't understand the way I'm just typing. I'm so full of emotion. I'm so happy for your class because I've lost a lot of money. You can ask, for instance. I know most of us who are here, we've lost. Like, I'm a trader. I trade, but you see, sir, most traders will just come, they just drop signals. Yes, it will go well, but they don't want people to learn trading. But you break it bit by bit. That is just the amazing point, sir. God bless you, sir. I really appreciate this. I am so happy to be with you, sir. I'm so happy to be in your class. And I really pray we just continue to move with you. And I pray God give you more understanding. The way you're just breaking it is what makes me so happy. I really want to work with you, sir. And I pray most of us who are here, we want to work with you. Thank you so much, sir. Thank you so much.
Awesome. Thank you so much, Mr. Joseph. Yeah, so this is brought to you by 10 Trade. So we have more goodies coming your way. So please just stick with us. We are very concerned about people making money. And that's why we are committed to education, right? So because what will set you apart from everybody else is, education, information, right? So it is what you know that will make you money at the end of the day in the forex market. So thanks so much, Mr. Joseph, for your kind words. We really appreciate. And 10 Trade also says thank you. Mr. Emmanuel eBay is asking, I have a question on drawing resistance and support zones. Okay, so let me unmute you. Emmanuel eBay, please unmute yourself and speak.
Thank you.
Yes,
Good evening,
sir.
sir.
Good evening.
Okay, I have a question concerning the zones. Just
Okay.
like the resistance zone up there,
Yeah.
at the peak of it, I can see it's above the wick of that green candle,
Yes.
and then the bottom is at the wick of the green candle.
Yes.
Now, is there a certain rule on drawing these zones? Must it like be on the wick?
Okay.
Or you can, yeah, is there a certain rule on drawing these zones?
Okay, so these ones that I drew here, they were just random drawings. Like I didn't really draw them because of support and resistance. But what you want to do is, so let me use this example. This one at the top here. So I'm talking about this place, this area. So price was going up, and then you can see price going all the way down. So how do you map out the resistance zone here? Like I said, you want to map out the last up candle before the reversal. Okay, so the last up candle, the last bullish candle before the reversal, and then you want to take into consideration the beginning, the week count. So in this case, you can use this place from beginning bottom to up. Okay, put it, or if you want to use this one here, this one to top. Okay, you map out everything with the week as well. So that's how you draw zones. Here's an example for a support. In this case, we can see this over here, this place. So how can we map out this support? Like I said, I like to use the last sell candle before the reversal. So that move before the reversal is what I'm concerned about. So is that zone. So this red candle here. So from beginning to the bottom. Oops, hold on. From beginning to the bottom. So that's what I'm concerned about. Is that clear, Mano? And then you draw it forward. Mr. Mano, is that clear? Okay, I think you're unmuted. Let me unmute you. Understood, right? Okay, awesome. So, Mr. Okay, Mr. Solomon, Mr. I'd love to see your face, please. Okay, so I am in sync with what he's saying. Are you saying you want to see my face or Mr. Joseph's face? Don't worry, for next week, I'm not, I'm on the road right now, so it's not very official for me to show you. Mr. Jeff is asking, can someone join your signal and your classes too? Yes, so 10 Trade has a signal platform where we drop signals from time to time, right? So I'll recommend that you reach out to your account officer and then let her know that you want to be a part of the signal platform. All right, so Once you do that, you'll be given information on how to be a part of the signal. Is that clear, Mr. Joseph? All right, good. Any more questions, gentlemen? Any more questions for quite tonight? Any more questions, additions, subtractions?
Yes, so I want to ask, please, when
Okay.
next? Because I want to still have that in mind because actually I'm working. So I want to, most of
Okay.
us are still working. So I want to know, do you have like days, like, because this is the beginner course. Is the
Yes.
beginner course ending today? Then
Yes.
okay. Yes, sir. You want to say something, sir?
Yes. So the beginners is a 2-day program. So ends today, and it's a monthly program for the beginners
Okay.
class. And then the next time that we are going to be having a session is on Monday, I think Boxing Day. I'm not sure if we'll do it on Boxing Day because the market will be slow this period. So we'll most likely resume January, right? So the first Monday, January, let's say the 2nd of January is on Monday, I think, is the next time that we'll have these sessions. So links to register would also be sent on via our WhatsApp platforms. And then you can also, so Mondays and Wednesdays, we go deep into analysis and spotting zones where we can buy and sell.
So the reason why I am asking, me, myself, Joseph, I am asking is this,
Okay.
because the way you broke down everything, I'm actually seeing that future traders are really going to come on that, because I'm seeing the way, like, because I love trading. I really, when I was coming up on trading, I told myself that I want to be a teacher. Maybe that was your passion, because the way you teach is so easy. So if the way you broke this down from everything to the explanation to support and resistance, so imagine you doing this for also liquidity going fast. So there is this understanding. I have this rest of mind with it. It's like this step-by-step process. So now we're not doing this and jumping to liquidity without getting those other, you understand, sir, those little information, the step-by-step.
Yes.
It might really be hard for. So that's why I don't mind waiting for a time you say, because I know where I end now. I actually support and resistance and this calculation of pips. I really understand this perfectly. And I just wish there's this way you can tell us, go and do this exam you give us now. Most of us are prepared for this. We can go to our chats, stay at this for money tonight. Like, I love this. But the issue is this now. When do you have to teach us for you to understand the second step of liquidity? Because once we come to class, now the next thing we see is liquidity. You didn't. I don't know if you understand,
Yes.
sir. Yes.
On those sessions that we have every week, I also teach, and then we apply it. So you learn
Okay,
those
sir.
sessions. Yes.
Okay, thank you for also answering and thank you for also explaining to all of us.
You're
Thank you
welcome.
so much. I appreciate.
You're welcome. Thank you so much. So, yeah.
Thank you, sir. Thank you, everyone.
All right. So guys, let's call it a night. Please, if you have any questions, feel free to reach out to your account officer on 10 Trade, and then we are always going to be available to render support for you. We want you to be profitable as much as possible. All right. So remember to trade with 10 Trade. Open your demo account, trade. If you want to start trading live, open your live account, fund it, and trade. All your questions will be answered by your account officer. And of course, 10 Trade offers amazing services, good spreads. You can choose to get an ECN account or a STP account. Okay, so happy holidays, Forex traders. I wish us all the very best. This year shall end on an amazing note for everybody here. And of course, wish you an amazing 2023. It shall be a profitable year for you, for your family, and we pray that all your heart desires shall begin to find expression next year. Amen. Let's have a remarkable weekend, everybody. God bless you guys. Cheers.